Most traders lose money not because they don't know how to trade, but because they look at wrong time frames. In today's video, I'm going to show you how to analyze the market to get precise entries and also profit, and how we can use time frames to analyze and increase our profitability when we are trading. First things first, before we can go any further, do you know what a time frame means? Do we know the importance of multiple time frame? Do you know that you looking at a wrong time frame can make you lose money even with the perfect strategy, even with the right trading plan, even when you are using your psychology that is controlled, even when you're good at trading psychology, but you can, at the end of the day, lose money when you are trading. So for anyone that is probably trading and wants to succeed or wants to improve their results, it's mandatory that they do this that I'm going to elaborate, that I'm going to share with you in today's video, which is time frame. Time frame is key. And for those of you that don't know what time frame is, in simple terms, the market charts generally have candlesticks. However, we have different chart types such as line graphs, bar graphs, and candlesticks. But then when we talk of time frame, we're looking at the duration an individual candle takes to open and close. So each candle has a specific duration, a specific time of its formation. And once that time elapses, another candle will automatically have to open. So this time it takes a candle to form is what we consider as time frame. We have different time frames depending on which platform an individual trader is using. Multiple time frame analysis is generally analyzing the same currency pair across different time frames. So if you're analyzing a particular instrument in different time frames, this is what we consider as multiple time frame analysis. And in the video today, I'm going to show you how you do that, how you analyze the market from a particular time frame to another time frame. We shall then see its importance, what's generally important about this. We shall see it's basically good for which styles of traders. We'll not stop from there. We shall see it's basically compatible on which instruments, on which currency pairs. Do we trade it anyhowly, or do we trade it rather in all currency pairs, or we have specific ones? So all that is going to be answered in the video, and also things that you should avoid once you are doing multiple time frame analysis, and generally everything that has to do with market. And generally the purpose of multiple time frame analysis is generally to get the bigger picture, that is the trend, and also helping us to make our entry precise when we are trading. So in simple explanation, higher time frame helps us know the bias, that is the direction in the market, and lower time frame will now be specifically for our entries in the market. Why do we do multiple time frame analysis? We have said in the first place, the purpose is generally to identify the bias, that is the direction, and then have our perfect or precise entries in our time frames, that is the smaller time frames. So the importance of multiple time frame analysis is generally to help us avoid false entries in the market. So once you're good, once you're probably done multiple, or rather once you generally look at the general overview of the market, that is from the bigger time frame, it's going to help you avoid false entries, because this time now round, you know the direction, you know the bias of the market, and through that you can trade in the direction of the daily market bias. So that's the first thing as to why we now need to look at the bigger time frames. Helps align with the market trend. The same thing, it's helping you, align, because what you observe in the bigger time frame, you now narrow it down and align it with what generally is in the bigger time frame. Reduce emotional trading. Through this, you're not just simply looking at only that information that you have in the smaller time frame, but rather now you're looking you're trading not as per your emotions, because some people come into the market and generally just trade anyhowly, trade based upon their emotions. But then this time round, you're trading as per direction, as per the bias of the markets. Gives clear structure. That is the bias and the setup entry in everything. So most traders lose because they enter blindly without context in the market. So this is wrong. This is dangerous. So now let's look at the best time frames to use when generally the combination of time frames we should always look up for. Personally, I generally look at the daily and straight down to 15 minutes, probably because of my experience and how I've been doing this consistently over and over in the past years. So for you who is trading, we generally have a combination of three. Okay, you can have the bigger time frame. Generally, it's 1 day. The middle time frame, most people look at 1 hour, 30 minutes. And lastly, they can always have their entries that is in the 15 or 5 minutes. So generally with me, I go to the bigger time frame because now I've been doing this for years. I know how best to execute. I know how best to interpret everything in the bigger time frame. Then I just straight come the 15 minutes time frame and enter. This is only to the experienced, but then if you're new to trading, if this is your first time you hear about time frames, then rather multiple time frame analysis, then I would encourage you to have a combination of three. That is either you should at least in it have the bigger one daily, then have at least 1 hour or 30 minutes, and then have your entries in either 5 or 15 minutes time frame. So basically, those are the best. This is the best combination if you're looking forward, getting the right combination of doing this, because it's also important at the end of the day. Then I'm also going to talk about the style. Multiple time frame analysis is better with which styles of traders. Because you may say, with me, I'm a scalper, I'm a swing trader, and so on and forth. So generally, this is suitable for only three. That is the scalper, the swing, and then intraday traders. Only the position traders, I don't encourage multiple time frame analysis when it comes to those. So every trader uses it, just different combinations. So any trader can use it, the three that I've mentioned, except for the position traders. However, you can also replicate the same ideology, the same narrative, the same way of doing this. If you are a position trader, you can also go into bigger time frames and and get your own combinations, because now we can use it in any combinations. Then we're going to probably look at when we're doing multiple time frame analysis, is it applicable in all currency pairs? I would not say yes, because not everything works everywhere or for everything. I would generally say that a multiple time frame analysis mainly works with Euro USD, GBP USD, USD JPY, and lastly gold, because these ones generally have clear trends, higher liquidity, and respect technical levels in the market. That's why I'm strictly sticking that yes, even though we have said that it may seem like it works everywhere, but it's not the case, it's not the condition. This perfectly works with those currency pairs, those instruments that I've just mentioned. And once you want to put this into consideration, then consider these currency pairs I have just mentioned. So my closing statement is this: multiple time frame analysis is not optional. It is what separates gamblers from professionals. So if you want to go professional, if you want to go profitable, if you want to change your results, then you have to apply multiple time frame analysis with whatsoever strategy you are using today. So if you've literally been not doing this, I encourage you, I urge you to do this, because it's not optional. It is what literally separates beginners or gamblers from professional traders. With the interest of time, I would love to end from there. I would love to end from here. However, if you haven't subscribed onto our YouTube channel, I repeat, please do such that you enjoy the content that we happen to release. You can also go on to other social media platforms of ours, that is Facebook, Instagram, TikTok, LinkedIn. I also share my contact within the video in any case you happen to find any challenges, and in any case you need assistance that is to do with mentorship, that is to do with copy trading, that is to do with signals, academy, learning, and anything that has to do with trading. We'll always be in position to help you. Just call us, just contact us, just DM us. We'll always be in position to help you with the interest of time. I'm going to end from here. Otherwise, have a lovely day. Enjoy.